Hey everybody, this is Gary Dean, and this is our free weekly video report for Wednesday, July 6, 2016. Hope you guys had a great long weekend, and we had pretty much left the week in really chaos. The market is just very, very confused right now. We saw the Brexit deal drop the S&P 120 points, and we saw it rally 110 the whole next week. So I had mentioned, at tops, things are going to get choppy, and if you don't like volatility, then you probably should step away from this market. So that's your free advice. If you like making trades and knowing when these specific reversals are taking place and then matching it up with a technical support resistance, and you like is seeing 100, 200, 300 points moves in a very fast manner, then you're going to love what's going to be pending. So I've been mentioning that Woody has already forecasted when the next black hole crash is going to be taking place. Now, if you didn't know when that date was, you would have known last week when we had the 100, 110 point drop out of the Brexit that wasn't a crash. We know when the date is. So it's one of those things that when you know what it is, these moves down and up they're just noise, and that's all it is. So you wouldn't have been piling on the short side because you would have known, all right, it just dropped 100 points, 110 points in 2 days. It's at support, and the crash isn't supposed to take place until this date, so most likely they're going to find some kind of support and bid it back up again. So why should you care about the next black hole crash and what Woody is forecasting? And really the big thing, he's forecasted the last three almost to the exact date, and there's a fourth that's coming right now, and it may be more volatile than these here just because of the presidential elections that are coming up, just the world chaos that's going on, especially in the Europe banking system, the Brexit. So there's a lot of stuff going on, but you have to know when it is because you're going to get shaken out like this. If you would have just jumped on the short side thinking this was the move, then you're not short anymore, and we may drop tomorrow, maybe next week, maybe next month. We already know that date. But the thing is that you need to pay attention to it because he's predicted the last three, and I wouldn't really bet against him that this fourth one isn't going to happen. So at Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that's to create market opportunities. And we identify these irrational elements through Woody Dorsey's proprietary sentiment database, which is sentiment is the missing link. Not a lot of investors know anything about it or how to even trade it. But then we match it up with his technical timing indicators that give us when reversals are set to hit. And we then add regular technical analysis to try to forecast where it is going to where it's going to reverse. So sentiment is really the metric of market emotions, and it's the missing link of market analysis because most traders focus on just fundamentals or technicals, and the markets will always have an irrational element. And the more that you really understand these market errors, the more you can take advantage of them, and that's he knows these market errors because he's predicted the last four crashes, and the thing is that he also picked the dates that they were going to bottom, so you get to get a double whammy on this. But the thing is that it's something wrong with the market, and when it's crashing, if you know the date to start buying, obviously you can make a ton of money on both sides of it. So Woody knows how to understand with these market errors and what to look for. And really with the sentiment, if you see everybody that is at the euphoric stage and they don't believe the market's going down, that's when you want to start looking for a top. When it's down at the capitulation and the crash stage and nobody wants to buy, that's typically when you want to be looking to buy. And these run in cycles and they repeat over and over again. So when you know where sentiment is and you have the really one of the founders of sentiment telling you what to make out of this, it makes your trading a lot easier. We're not going to actually do the trades for you, but the thing is, if you have this information, you're smarter than probably 80% of the people out there trading. So we had a 94% reading on Thursday, so it came into Friday, and then we had a 34% reading yesterday when we had a pretty decent sized drop, but then it came back towards the end of the day. But it hit 34%, so it wasn't really any significant sentiment reading. And we had some bullish divergences that were on the 15-minute charts, which, let me go to here, which you can see here. So when we were making lower lows here, you can see that the momentum as well as the MACD were making higher lows. So that's your bullish divergence. So it's warning not to be getting aggressive on the short side. Now, I had said that it has to go below 2081 for the bears to get some momentum going. I still believe we're coming down to the 2064, possibly even down to the 2036. But there's also a chance that we are going to come back up here and test or even break this high. And the reason why, if we look at a 60-minute chart, we don't really have bearish divergences in place. So if we move up another 10 points or whatever it is here, make another little new high but stay below this high, it's going to set up for another bearish move to the downside. Now, this looks like it could be an inverted head and shoulders. I mean, obviously this shoulder isn't formed yet. I'm just anticipating what can play out. But you can see we're in the resistance zone right now, and we closed the gap. We're about to close the gap that we left here, so there's no gaps on the upside, but yet we have a plethora of gaps on the downside that they still need to fill. So from a technical basis, you would leave the door open for a possibility of a push just above this 2109, but you would have the expectations that the market is going lower. So you don't want to buy this last thing. You would rather want to be looking as to where to short. So this is what Woody had put out on the 5th. He had said that the recovery attempts into the dates, these are, okay, hang on. It's the potential remains for recovery attempts into, and unfortunately I can't give you those dates because those are for members, only before another declining phase hits. The black hole environment into, and again, we know these dates right here, and beyond should continue to provide negative headwinds. He's still looking at the specific date for a top as potential selling zones. Now, the last time he had selling zones was the kill zone, and we saw the S&P drop 240 points on it. So we know the date that we want to start looking to sell. And that's really, what you need to know is if you know when the top is going to be coming, you position your portfolio accordingly. And then you're just going to look at where these resistance levels are. Are technicals giving you sell signals? And if they are, you just take a short position and just let the gravity take its course. Because when you have sentiment that's at extremes, you have technicals that are diverging, and you have a turn date, a reversal date coming, your odds of betting against that happening are very, very low. You may win 5% of the time, period. So when you have those three things lined up, you really do want to pay attention because even if they're wrong, they're typically not wrong for that long. So basically what we're doing right now, we're keeping this, we had a lot of people requesting the $2.99 for the first 3 months, and then it moves to $149.99. Use the coupon code 0706. I am ready. And then you'll have it for the first 3 months. And in addition to that, anybody who signs up will be getting a free membership to Markets Path, which is my other website that I do. And it's more of on a technical basis, and I give you nightly video reports or updates, morning notes, email trade alerts, and we also have a We also have a trade room that you can join in there. So it's only for the first 20 subscribers. And until next week, good luck trading.